We're taking a look at the currency market now with Nomvuyo Guma, Macroeconomic Strategist over at Standard Bank. Good morning, Nomvuyo, and thanks so much for joining us today. Well, let's take a look at that weakness that filtered through to the rand on Friday, tumbled 2%. We're trading pretty flat this morning, and that as we had Fitch come through downgrading South Africa's credit or rating outlook. What did you make of that rating coming through, downgrade from stable to negative?
Well, quite an unfortunate development for both the rand and the South African economy. And of course, this move by Fitch follows an earlier move by Moody's that also downgraded the ratings outlook for South Africa. And of course, now that they are negative outlooks, it implies that there could be an actual ratings downgrade to follow. So all of this means that this week's MPC meeting and in fact the budget speech to follow in February are probably going to be more keenly watched events than they would have otherwise, because Fitch highlighted, a lack of fiscal space, a deterioration in South Africa's fiscal standing, and as well as a number of other structural problems where they said that there hadn't been sufficient progress made on those things. Those were all reasons for the downgrade, and of course those are fundamental to the currency, and so you saw that very sharp reaction coming through from the rand. So it was off some 5-week highs, certainly seemed to be poised initially to end the week on a high note, and then unfortunately this news coming through in the late afternoon and quite a sharp reaction from the currency, and it still seems to be on the back foot again this morning.
Of course, we are very interlinked to what's playing out in the Eurozone as well, and on that side, we've had some pessimism emerge in terms of the kind of resolution we're going to see, how fast it's going to filter through as well. What's your view on that situation and the kind of impact it's going to have on the South African economy? Of course, with this week being a very data-full week for South Africa, it all culminates in that MPC decision come Thursday.
Well, yes, absolutely. The MPC decision is undoubtedly going to be the highlight. But just to return to what you were asking on the Eurozone situation, we've been saying for some time that it doesn't seem that politicians are really coming to grips with what the issues are in the Eurozone. And we're very skeptical of the moves that they've made thus far. They seem to be treating the symptom rather than the root cause. And so with that in mind, we still see the potential for further deterioration in the Eurozone. They're already about to enter a recession, if not already in recession. And we think that there's going to be quite a sharp reaction to follow from the euro dollar. We see euro sinking as far as 115 in fact this quarter. So things in the Eurozone still not looking particularly rosy as far as we're concerned, and that of course is going to have implications for the rand. The rand will probably track the euro softer in the first quarter, and as you mentioned, for this week in particular, that MPC meeting is going to be of critical importance. We've slightly amended our view in fact of the MPC meeting. We think that the MPC is likely to keep rates on hold at this meeting and throughout the year. Previously we had been leaning towards or saying that there had been some room for a rate cut, but now with these developments, particularly the announcement from Fitch, we think that the likeliest outcome is an unchanged stance from the Reserve Bank for this year.
So run us through the kind of trading range you've pegged out for the local unit versus the dollar, Nomvuyo, because on Friday it looked ready to firm through that 8 mark, which has been seen as a key resistance level before pulling back on that negative news that filtered through.
Well, it would take a far braver woman than me to actually forecast a trading range for today, because you have to remember there is a US holiday, and so that means that in lighter liquidity you could see the rand's moves being more exaggerated than usual. But having said that, if the rand manages to make a break above 822, because we believe that weakening bias is still firmly intact today, so if we make a break and sustain it above 822, the next level we'd be looking for is then 827. A move above that then brings the 840 level into play. Should we, however, get some positive news forward today, we could possibly see the rand strengthen as far as 806, and below that maybe as far as 794, but that certainly isn't our best case scenario for today's move.
Of course, as you said, a lot of the rand's direction depended on what plays out in the Eurozone and what happens on the euro front specifically. You're very bearish on that euro side of things. The question comes about on the dollar though, and just how long strength that we've seen filtered through on the US currency could last for.
Well, that's of course a very interesting question. In our view, much of the dollar strength that you've been seeing has been related to the fact that markets have been so highly risk averse, and that then goes back to the euro debt crisis. So in the short term, we're probably going to continue to see the dollar remaining very well supported as markets continue to be quite nervous. And so that probably puts the dollar in play for quite a positive year this year. Going forward, of course, we'd have to see more of a resolution in the euro sovereign debt crisis, possibly a pickup in growth and more of a sustained optimism in the market for you to be able to see the dollar weakness start to filter back in.